Welcome back. Episode 7, Internet Capital. We got a jam-packed week. A lot of stuff going on in markets, tech, regulation, and politics. I think we might be cooked here in America, but we're not going to talk too much about that. The Grand Tonto, how are you doing?
I'm doing great, and we're filming a day early, kind of right in the middle of the news cycle here with the Chevron deference seemingly being thrown out, which will strip agencies of rulemaking powers. And at the same time, seeing the SEC is suing people again. The day after what could only be described as a horrible presidential debate here in the US. So, lots to talk about, Ben. Let's get started.
Yeah, Gary's off his rocker again. He seems to not have had enough of losing in court, and he wants some more action. So we'll get into that. But there's a lot to talk about. So I guess we'll just start where we usually do with the markets. So let me pull
Yeah.
up good old TradingView here. I think I need to update my browser again because it still does not let me share it. So I have to open it on Chrome. But here we go. It was another down week for Bitcoin. Okay, as you can see here, the 1 week candle, we're currently at about $60,918. We started the week at 63,150. We're near the bottom of this holding range that we've been in for a while. Any initial thoughts on the charts, the Grand Tonto? Are you still bullish? Are we going to zero? I'm still bullish. What do you think?
No, I don't think Bitcoin's going to zero. I do not think ETH is going to zero. I think these charts represent uncertainty, and I sort of still believe that the theme or the whole meta for the previous bull cycles may not hold this cycle, and maybe we're moving towards more traditional asset type cycles, and maybe this is just part of it. So I'm still very optimistic.
Yeah, I echo that sentiment. I think like you said a couple episodes ago, it could be more like equity markets from now on. The vast majority of the risk has been taken off the table in terms of the entire industry getting destroyed from being accepted by BlackRock, Fidelity, VanEck, these traditional institutions, and also through some of this regulation that has been a bit kinder recently, and we're moving in a good direction. So I think the wild 70% swings in Bitcoin and ETH might be done, but regardless, we'll see. But the
Yeah.
reason that we were down in the markets this week is because one, the German government continues to sell their Bitcoin. The United States government started selling Bitcoin, presumably. They sent a bunch of their Bitcoin that they had to Coinbase. And ironically, the White House has declared Coinbase an illegal exchange, but they're using it to sell their Bitcoin. Any thoughts on those two?
I think they're both mistakes. I think they're, more of a mistake for Germany because it's a smaller economy. For the US, I don't think it matters a whole lot what they sold. I think it's ironic. I think it's funny. I think it's typical.
Yeah, maybe who knows? Maybe they're swapping Bitcoin for ETH or Sol or something else. Maybe some L2 tokens. They're diversifying. Let's say
What
that.
about Pepe? Maybe they're buying Pepe or Dogecoin. You
The
think?
U.S. government is buying Pepe. Yes, I think
That
that's
could
it.
that's it. Okay. Hey, before we move on
We'll
to
see.
the ETH
We'll
chart,
see.
um, there was something I saw that kind of wanted to talk about that's another macroscopic factor in terms of these asset prices for crypto. There was a chart, and I don't have the reference in front of me, but essentially what it showed was there's more money in money market funds right now than ever in the history of the U.S. There's more money in money market funds, and that's mainly because interest rates are high. And in every traditional economic textbook, it's when interest rates drop, assets like the stock market are riskier assets like crypto that can have higher yield go up. So what we're seeing here is a powder keg of money sitting in what traditionally is low yield investment money markets that as soon as rates drop, which is going to happen, has been delayed. I think we thought it would happen now, but it's been delayed. That's going to happen the next 6 to 8 months. That powder keg is going to be unleashed both on the stock market and crypto markets, in my opinion. And I don't think that's a stretch to think that's what happens every time. It's a traditional cycle. So I think that is still a huge tailwind that's going to, at minimum, support these prices, and I think eventually, push them significantly higher.
Yeah, I like that take. The one thing to note is that whenever the interest rates do come down, so if people don't know, these money market funds hold really short-term US treasuries mostly. So 3-month treasuries perhaps, and they're very tightly correlated because of this to the federal funds interest rate. So whenever the rates come down, you're not getting much yield on any of those funds. So the capital flees, and where does it go? It goes into higher risk assets. And this is actually at the same time great for those people because as interest rates comes down and the economy is less restricted in terms of the price of money, let's say, businesses get humming again. They have more ability to take out debt, hire more people. The economy gets going. People have more money in their pockets, and then that fuels business earnings, fuels equity prices, fuels valuations, and then the whole thing's a self-reinforcing cycle. So I think that is definitely some dry powder that the crypto markets can expect to be injected over the coming months.
Yep.
And then the other thing that happened this week that we can't forget, this is what led to it was about a 7% sell off earlier in the week, and now we're down about 5-ish%, I believe. But we were down on the news that Mt. Gox, the Bitcoin exchange from 2014, where some absurd number of Bitcoin, 800,000 or something like this, was hacked in 2014. And the defunct crypto exchange is supposed to return over 140,000 Bitcoins to the victims of the hack. So in the hack, a bunch of the Bitcoin was stolen and they did not recover it ever. And now some of the Bitcoins that they did recover are being returned, and people are anticipating this to have some downward price pressure because of the selling of people getting Bitcoin back after years. Any thoughts there?
Where'd the other Bitcoin go? It's just still people stole it and it's still out there and it's not recoverable.
Yeah, probably North Korea has it, or Michael Saylor bought it on the black market. I don't know. But yeah, it was hacked.
And they can't trace the wallets?
I guess they can, so they definitely can track the web of connected wallets to these
Yeah,
transactions, but I'm not sure what they're doing. I'm not sure if they've been dormant. I'm sure if you could just Google it and find that
gotcha.
information, but it has not been recovered by authorities.
Yeah, I think that probably, I mean, the data I read said professionals were estimating maybe 5% would be sold immediately. So I think it's more of a emotional selling of people that own Bitcoin and not necessarily the Mt. Gox Bitcoin increasing supply so much literally that it's driving prices down. Um, and again, I don't really have a good feel for how much 140,000 Bitcoin are on a daily basis. I know that's a lot compared to what's mined, but it seems like if those all got dumped in one day, the market would go down a heck of a lot more.
Yeah, that's definitely true. The thing I would note here is that this Bitcoin has not been entirely locked forever. So people could trade claims on their Bitcoin lost in Mt. Gox. So they had that liquidity on their locked up Bitcoin for the past however many years. And most of them probably sold it at a discount to longer term investors who are likely to just hold the Bitcoin. So that's one thing to note. And then also back in 2014, remember, Ethereum wasn't a thing. Crypto really wasn't a thing. It was just Bitcoin. So a lot of those people might just diversify those holdings into other crypto coins because I'm optimistic about the market. Not everyone is, but some of those people probably are and will just diversify out into other crypto assets. So that's another thing to note. I think it's going to have some negative price impact, but it's fairly minimal.
Yeah, I mean, if these people were holding crypto in 2014, they probably are at least at minimal knowledgeable and probably diehard crypto people and believe in the crypto in general. And back then, that Bitcoin was their only option. So I concur with that. I think that's a good take.
Yeah, yeah, definitely. Some of them will sell because they're up thousands of percent, but
Yeah.
still, I think this is overblown and that at least the overhang of this selling pressure coming onto the market is gone now because it's been around the industry for as long as I've been here, and that's getting resolved. And I believe the first distributions to the people who lost their money will be next week, so first week of July.
Hmm. Wow. So that's
Yeah.
going to happen next week. The ETH ETF is very likely going to happen next week. Um, so lots of big stuff coming. I thought summer was supposed to be nothing in crypto. This is craziness.
Yeah, they used to say sell in May and go away, and we haven't had the best few months, but there's been a heck of a lot of news and a lot of developments on the technical, the regulatory, just within
Yeah.
crypto. I think the next price moves, big price moves, in my opinion, are going to be towards the end of the summer. Once ETH ETF flows get going, and then people come back from the summer, they're ready to lock in TradFi. But we'll see.
Yep.
And just to look at the ETH price chart here, we're also down on the week, down about 3.5%, a little less than Bitcoin. Currently sitting at about 3,400. So not much going on. I think most traders anticipate that we'll just kind of keep grinding down like this for a bit before some huge move. But I have no thoughts here. Any thoughts on the chart before I dive into ETH ETF flow predictions?
No, no, I think I mean, from my perspective, at that level of weekly, it looks just like the Bitcoin chart. No new comments there. I still maintain that there is a building momentum of use cases for ETH that will support its floor very easily. In addition to the ETF, the ETF is easy, people buy it, but there's all these tokenization ideas, um, and there's all these narratives coming out from Wall Street that, well, wait a minute, these traditional finance guys just view ETH or Ethereum as Swift plus reconciliation. And that's, to me, as powerful or more powerful than any retail narrative.
Yeah, 100% I agree. I had a tweet about this saying the idea that ETH has no institutional narratives is just a dumb argument because it has four or five that you could choose from. It's the internet bond, it's Bitcoin plus programmability, it's the open source app store, it's the global settlement layer for all financial assets that can be 24/7 sent over the internet. There's just so many. And I think all of these
Mm-hmm.
are just underestimated by market participants. But hey, if you're a long term investor, you don't care. I'm fine with that for now. But that's my take.
Yep.
Okay, so for ETH flow predictions, let's see, I've got a link here. The Bitwise CEO, Matt Hugan, his prediction is that ETH ETFs will attract $15 billion in flows over the first 18 months. So for reference, Bitcoin attracted approximately 15 billion over the first 6 months. So since it's launched in January to about now, like 5 months, 6 months. So that would be about a third of the buying pressure because it's happening over a three times as long time frame for ETH. But ETH is also a third the market cap of Bitcoin. So this would imply a similar price movement. And Bitcoin moved about 40 to 60% in the months following the ETF. So that makes me pretty bullish. And I'm pulling up his argument here. He kind of goes through the relative sizes of the two assets there, how many ETPs, exchange traded products, have been traded overseas compared to Bitcoin ETPs. And then he kind of deduces that estimate from these different facts. I'll link this. But this made me pretty bullish. Any initial thoughts on this?
Um, Not really. I mean, I respect what he's come up with. I think in general, time will tell. I do think that's a more realistic prediction than some of the, maybe crazier predictions of tons and tons flowing in immediately. I think an 18-month time frame is reasonable. That's 1.5 billion a month, or 1.25 billion a month, which seems like not huge flows, but probably pretty typical flows. Again, though, I will say that if we have big interest rate cuts, those flows probably will increase, as well as the Bitcoin ETF flows will probably increase perhaps significantly.
Yeah, I 100% agree due to the kind of the facts that we stated earlier in the intro. The one thing I will say here is that this would be one of the most successful ETF launches ever if we do get 15 billion over the first 18 months. Compared to Bitcoin, that's not crazy, but Bitcoin was the most successful ETF launch of all time, essentially. So if we even approach that, that'll be extremely successful by typical measures. And I think that's an important thing to point out because we're comparing it to Bitcoin, which was quite literally the best launch.
Yeah, I mean, how often in a financial person's lifetime do they get to participate in the launch of what is literally not a derivative asset, a brand new asset in a brand new asset class. And here, over the course of, I guess, 6 months, two brand new assets that work not exactly similarly, but are both part of crypto, are going to launch. And, seeing this is just the beginning. It's no wonder that they've seen the highest inflows or predicted highest inflows ever. And they're both tech, Ben. They're both tech. There's maybe a surrogate for Nvidia or something like that. So they have that advantage as well.
Yeah, 100%. I actually think people saying that the narrative for ETH is worse than Bitcoin, I actually disagree. I think like your traditional investor would be more interested and is more interested in the current equity market, for example, in tech. Like most
Hmm.
investors aren't looking for gold, especially like the younger group, Gen X, the millennials and younger. None of them hold gold. The tech plays are much more interesting. And if you just look at S&P 500, it's dominated. If you don't do equal weighted, if you do market cap weighted, it's dominated by five stocks, and they drive all the returns, and they're all tech companies. So they're much more familiar and interested in technology plays, not Bitcoin as
Yeah,
a gold play. It's just my comment there. So I
yeah.
think that argument is,
Well, and something that you just said that's sort of interesting is that there's this notion that um, the ETH narrative is worse than the Bitcoin. And worse and better are the wrong two adjectives. It may be harder and easier are the two adjectives. Bitcoin probably is easier because it really is like gold. It's an asset you buy and it sort of is like gold and sits there. ETH is harder, right? It's not that kind of asset. It's all the things you mentioned earlier. So yes, it takes probably smarter people or the same people longer to understand what it does. And I don't think that's bad or good. That's just how it is. And time will tell, but I think that's a distinction that people are making about worse and better when it's really harder and easier. And there's a big difference on the investability of something that's hard versus easy. People on Wall Street do a lot of hard crap all the time. So I don't see why this isn't rocket science to figure this out.
yeah, no, 100%. I'm a big ETH bull. I think Bitcoin has the first mover advantage fundamentally, but after that, it's more widely known, I suppose, in the public consciousness as they think of crypto, they think of Bitcoin. But fundamentally, over longer periods of time, these fundamental drivers and characteristics that ETH
Yeah.
have will show up in the market. That's why I'm a ETH mega bull. But I think that's all I want to talk about there. The last thing to note is that there was another ETH flow prediction from Galaxy Research, and they estimated $3 to $7.5 billion inflows in the first 5 months. So this is the same time period as Bitcoin. So that would be about a fifth, like 20% to 50% of Bitcoin's flows, which is a bit more bullish, I would say, than Bitwise's prediction, but it's still relatively in the same range. It's a wide range. So I wanted to note
Yeah.
that.
Yep. Sounds good.
And okay, we're gonna watch the next Bitwise. They have another ad for the ETH ETF, so I wanted to show it. I
Oh.
really like this one. They're doing a great job.
Big finance. Did you change? What? No. I'm always like this. You want to hang out? When moon, man.
Do you even know what that means?
No, I do not.
I thought
Are
that was good.
these are these TV commercials?
Yeah, I'm pretty sure they're running them. But look
Wow.
at that. He's got a pudgy. See the pudgy?
I did see the Pudgy. I heard Pudgies are taking a soaking though.
They're down from there. I want a pudgy so bad. My
Don't get a Pudgy.
portfolio does not make for a reasonable pudgy allocation. My NFT portfolio is already underwater, so I don't think I can add one in there. If I were
No.
you, I'd just buy a pudgy. You have
I don't
no
want a
allocation.
Pudgy. I don't want a Pudgy.
Okay, I'm putting you on the spot. Why are you so against NFTs? What's wrong with it?
I can't, there is no discernible difference of an NFT that I look at on my computer screen or on a TV screen or some screen than any JPEG or anything else. I don't enjoy that kind of collecting. I don't understand it as well. I get there's limited scope, but it's just not up my alley.
Whatever, man. Whenever Pudgy's moon, you're gonna be sorry, and you can't say I didn't tell you. But whatever. They're so cute too. I
Fine.
mean, come on. And even if you just
I'd buy the
consider
stuffed
art,
animal.
no, that's dumb. It's much more than it's definitely art. So there's a whole art market in traditional finance, mostly used for like money laundering and tax evasion for billionaires. But there is a market, and you could say the same thing of like all the common complaints about NFTs. The same could be said for art. You can just buy a copy and whatnot. But I think NFTs and blockchains generally can kind of be the next evolution of ownership of media companies and media assets. So I think that's the direction NFTs are going. And if one does catch on and become a big thing, I think Pudgy Penguins is the one. So not huge NFT guys, but that's my 2 cents. I would buy one if I had the allocation for it, but currently do not.
Okay.
You'll see. We'll check back. We'll check on Pudgy's
Well, okay.
near the top of the cycle. Once ETH's at all time highs. I think Pudgy's are currently at like 80th or something. Yeah. Okay, so moving on to Solana. Solana had a massive week. I know that you're not the biggest Solana fan, but
No.
they had a massive week, so we're going to talk about it. So, first, VanEck, and then just earlier today, 21 shares, files for a Solana ETF in the United States. So this was ginormous news, and in this announcement, VanEck, they stated, "We believe the native token, SOL, functions similarly to other digital commodities such as Bitcoin and ETH. Like Ether on the Ethereum network, SOL can be traded on digital asset platforms or used in peer-to-peer transactions." What are your initial thoughts on this?
So we're going to throw aside my previous comments about Soul actually not being up. I can't blame those fund families, which aren't the two biggest, I don't believe. I can't blame them for putting this in. Strike while the iron's hot. I think Solana or Sol is the next most logical one to get an ETF. Um, you know, just like in normal ETFs, there's different quality of assets they hold. Well, that's what's happening in crypto, and that's the natural evolution of the market. Maybe they thought they could get in there early. I don't guess Fidelity and BlackRock are going to be concerned with Sol at the moment, although you never know. Maybe those guys want to be the leaders in sort of this is kind of a derogatory term, but the down market. There's lots of people that might want to invest in the down market, just like we saw lots of people buying those dumb mem coins on Sol. So, there's a place for all of these.
Yeah, okay. Meme coins, first of all, the Grand Tonto. I
Oh,
know you're the
thank
oldest
you.
fan in crypto, but you got to get meme coins right. That's okay.
All right,
That's okay.
meme coin. At least I didn't say Ethernet.
Yeah, that's true. He confused
Meme
Ethereum
coins.
for Ethernet in our interview. Yeah, meme coins. Meme
Meme.
coins.
Meme.
There you go.
All
Yes.
right.
But decent take. I think, okay, I have two initial thoughts. One is that they're just trying to get ahead of the curve. They want to be the first ones to file. Eventually, this is going to be a thing, eventually, especially if we get a change in regime here in the United States with the White House and with the regulators. And they just wanted to get moving on that. So I think that's definitely true. But I am pretty skeptical on the approval timeline. And Eric Balchunas here in the tweet I pulled up said the odds of a Solana ETF being approved in the next 12 months are tied at the hip to the odds of change in POTUS. And he's talking about the debate, but says chances are higher today than they were yesterday. And they're not giving an estimate yet because it's way too early. My take here is that the ETH and Bitcoin ETFs were approved based on the fact that the spot prices of the assets very highly correlated to the trading of the futures products in regulated markets, which is regulated by the CFTC. And this was the entire basis for allowing the products to trade. So under the current regime, Solana does not have that benefit. So something would massively have to change within the SEC, within the regulatory framework of the United States to get it approved. So I don't see it happening anytime soon. And after that, I think the marginal benefit to asset managers and traditional investors of allocating to Solana after we already have Bitcoin and already have ETH is really diminished. So I think the longer that we kind of wait, it's actually more bullish for Solana, and I think that's going to be how it plays out.
Yeah, I think you said something important to recap, and that is both Bitcoin and ETH past traditional financial benchmarks of correlation between futures markets and spot markets. They had both of those. That's what normal security assets, I guess, or any asset has to pass through, and they did. Solana doesn't have those futures markets yet, as I understand it. So those need to take place, and there needs to be a sufficient amount of time to show that same correlation, independent of anything that the SEC wants to rule on or not rule on. I don't think anyone would think an ETH ETF or a Bitcoin ETF would have been approved if they didn't have the futures market. Independent of POTUS, certainly that's an effect. There needs to be some time to establish this baseline data, I think, before we can even start talking about an ETF in any regulatory climate.
Yeah, I think the main driver of the approval of Bitcoin and ETH was that the argument from the SEC as to why they could not approve it initially was that there's manipulation in the markets. And then the counter argument was that, but we already have futures products. And then they said, okay, well, let's look at the market for the futures products. If there's no manipulation there, then there won't be to the spot product because they should be highly correlated as they have they're the same asset underlying the two things. So that's the argument. And again, like you said, we had 2 years of data for ETH and Bitcoin, 2+ years. Solana doesn't have that. So I don't know how they can overcome that argument at the moment. But that's just something to keep your eye on. I think, again, first mover advantage, keep your eye on it, but nothing to be too concerned about currently.
Agreed.
Cool. Well, next up on Solana, they had an announcement earlier this week. This is a bit technical, but I'm going to bring it up. Solana announced some ZK compression technology, which helps with their scaling capabilities. So basically, Solana developers are working on zero knowledge compression. It's a scaling technique that promises to significantly reduce on-chain computation costs by essentially, it enables fee savings by kind of minimizing the amount of data that is stored on chain. So it's similar to what ZK proofs do on Ethereum. They only submit a proof of all this data and computation that is taking place to Solana. And I don't know the deep technical details here, but that's the bottom line. And then this sparked a bunch of arguments amongst Ethereum and Solana people, because the Ethereum people were saying this is very similar to an L2. How is it different from an L2? Solana people argued back. People got very technical about it, and it got deep in the weeds. And my proclivity is not to dive deep into these things, honestly. Like, I'm more of a markets guy. What's the impact of this, right? And investor Raoul Paul. Do you know Raoul? He's a big macro investor. He's big in the space, been in it a while. But he stated that he read a lot of mid-curve debates on the new Solana ZK compression. Then he said, more scale, more cheap. This is big step for Sol. And I agree. That's the general sentiment. It's good. I don't think arguing about the little minute details is really important. But this was an interesting development from the Solana team.
Good.
Man, a few words.
Yeah.
Okay, I guess we'll move on to the next one. This one's more interesting to me. I don't know if you saw this, but basically Solana announced actions and blockchain links. They called them blinks, in an attempt to bring crypto to the entire internet. So this basically allows Solana transactions to be opened anywhere on the internet with no DApp required. So basically, actions for Solana here are APIs that developers can use to allow complex business logic to be used to construct transaction messages that are previewed and signed and sent by a client within some other application like Twitter or something else like this. And then blinks are the way to interact and initiate an action. So it's just a link, and I can show a video here that, here it is, that people can click and to do a transaction through Twitter or some Web2 external place. So just take a look at this. This is within Twitter. So developers can allow anything to be turned into a blockchain link, and then if you have the wallet software in the browser where you're browsing on your computer, then you can just click it, sign it, all through there. You don't even have to go anywhere else, which is very cool. I will say, I think this
Very
is really
cool.
good technology, and they're pushing the boundaries of what's possible in terms of UX, which is very good. The one thing that I will note here to caveat it is that you need to have the wallet software on your browser, so a browser extension to be able to do this, and it's not available on like a mobile app. So I think its ability to onboard normal people is limited because of this, because everyone's on their phones anyways, but nonetheless, very cool.
So a couple things there. Didn't Uniswap do this exact same thing a couple years ago? I thought I read, and for
Yeah,
swapping.
here Hayden Adams, founder of Uniswap,
Yeah,
sent out a post here. Uniswap kind of did this 5 years ago. He said it was just kind of crazy and said it never caught on as a UX pattern, but I never used that, and I think the reasons it didn't catch on is kind of that same reason. Like it's not a mobile thing. So if you're a crypto
hmm
native, why are you gonna do that anyways? And I actually think also that it's kind of dangerous to just have transactions on Twitter. Like a bunch of bots are gonna send these, and then if you don't
yeah,
simulate the transaction, you can get drained really easily.
yeah. You know, Ben,
But
I think
still cool though.
very cool. And I think when you pulled that up, it was USDC, and that made me think of something like that interaction pattern is on a desktop and all that. But think of it, I think of that this way. I can easily pay for things on Amazon with USDC through that user interaction pattern. I buy my Amazon stuff and most of my stuff from a laptop. So to me, that pattern is easy to use. And, you know, I know it's not exactly the same thing, but it seems like we're getting closer to where these big time retail apps could have add your crypto account. They only take USDC, let's say, but you could pay with that with, you know, one click or on your blockchain, things like that, which to me is a big deal. That's much bigger than Solana or Twitter or anything. That's like legit retail using real crypto to pay for things.
Well, here you go. You must have not seen this announcement then, because exactly what you're describing is what Coinbase is doing. Coinbase partners with payments firm Stripe, and Stripe will incorporate Coinbase's Layer 2 network base into its crypto payouts product. So Coinbase customers will be able to use USDC via Base on Stripe to streamline fiat to crypto conversions and to facilitate money transfers to over 150 countries. So Stripe is a really big payment processor and payment infrastructure provider for merchants, and they're getting really closely integrated with Coinbase and the Base L2 to make this sort of thing much easier.
Yeah, this whole narrative with Coinbase and Base and Superchain and Optimism, do not overlook that. You know, Coinbase is a crypto company that seems like they're run by professional business people that have a clue on how to build out a business. That business happens to be crypto, and they are taking steps to do that and extend their reaches everywhere. With Base, it's probably going to be the native playground for their users. You have Mode, which could turn into the DeFi playground for the advanced users. I believe there's something called Fractal, which I don't know much about. But they're building up this ecosystem, and they're putting these on ramps and off ramps into it that just make it incredibly easy. And that's gonna, I don't know when we're gonna realize that, or people will realize that value, but it's gonna happen. And I think the Robinhood guys have seen the same kind of deal with they're buying, I forgot the name of it, but Sex, and they are investing in, what is it, Arbitrum, Ben? They're investing in one of the
They've
other.
integrated, yeah, they integrated Arbitrum, so you can make DEX swaps essentially
Yeah.
on Arbitrum through the Robinhood app.
Yeah, so these are complete financial ecosystems. The only thing that's left for Coinbase is to put on a TradFi arm, and I think Robinhood has the traditional finance, but they got a lot of work to do on the crypto side. But these are two, I think professional organizations building out complete financial ecosystems, independent of traditional finance or decentralized finance, which is incredibly cool and an incredible narrative.
Yeah, I think the thing to note here, like if you're an investor in crypto, you're a longer term investor and you want to buy some assets and just hold them for a while and bet on a few things. Betting on this whole ecosystem of the super chain, Coinbase space is your best bet because you should bet on people and business development. People get really down into the technical details about the best liquidity mechanism here and there. At the end of the day, the best technology doesn't win a lot of the time. It's really about business development, it's about user experience, and it's about onboarding people. And Optimism in the Superchain has a huge advantage because of their close partnership with Coinbase. And Coinbase, like you said, is a very competent organization. They push out products. Brian Armstrong is a fantastic leader, very crypto aligned. And I'd be hard pressed to bet against that. And yeah, that's kind of my take there because I think
Yeah.
everyone gets way too caught up with the minute technical details of things in crypto some of the time.
Yes, absolutely. I agree 100%. And I mean, we've said this before. We invest in Coinbase and in Robinhood for these reasons. And I don't want to say it's my home chain, but the super chain is becoming a big, big part of my online life.
Yeah, no, definitely. I'm bullish there for sure. I don't know about the token prices. You can look at
They
token
all
prices
suck.
aren't the same. Yeah, token prices don't necessarily follow which ecosystem's doing the best. As you see, like Arbitrum has the most TVL, the token sucks. Token does not equal project. End of the day,
No.
remember that. Token does not equal project. 101
Yes,
crypto investing, I would say. But
absolutely.
regardless, bullish on the super chain from a user and development perspective. So, continuing with Coinbase, just a couple days ago, Coinbase sues the SEC and the FDIC. So, the too long didn't read here is that basically Coinbase is accusing the two of trying to cut out the crypto industry from the banking sector. This was known as Choke Point 2.0. If you heard of that, that was, I don't even know how long ago, maybe a year ago at this point. But they've said that the two regulators have not complied with the Freedom of Information Act and it's asking the U.S. District Court from the District of Columbia to force the agencies to comply. So, Coinbase's official statement stated that for nearly 2 years, a wide array of federal financial regulators, including the SEC, the FDIC, and the Federal Reserve Board, have used every regulatory tool at their disposal to cripple the digital asset industry. The FOIA lawsuit seeks to bring light to the FDIC's role in that unlawful scheme. So I think that's big. Coinbase going on the offensive after all of these unlawful attempts to choke out the industry. So again, just another example of Coinbase, really pushing us forward on that front as well. Any thoughts?
Yeah, as I understand this is a lawsuit about freedom of information. So essentially what Coinbase wants is the emails, letters, and other correspondence between those agencies to see what they said person to person. And the sort of ingenious thing is they're not probably not going to sue them any other way, but they're going to publicize what these agencies said in what potentially is just a a smear campaign. It's like we literally were being harassed or judged unfairly, or some high level congressperson or executive branch person directed us to do this. That's what they're looking for. They don't need money from the government. They don't need to recover anything. They want to see the smoking gun of evidence on who started Choke Point 2.0, for example. And, you got to admire them for doing that. And I fully expect that, the FOIA request will be granted at some point. Now, there are exceptions, but it's hard to see what the exceptions would be in this case. These are all organizations and not people.
Yeah, 100%. I think this will be a very juicy outcome just so we can see how internally at these organizations they're
Yes.
talking about crypto and if it's
Yeah.
a really deliberate attempt to choke us off and whether that's because of political reasons at the instruction of maybe the White House, maybe someone else. So that'll be really interesting, something to keep your eye on. And just on the topic of regulation, unless you have something else to say there, I wanted to talk about the couple of lawsuits that came out within the last hour, I would say. So one is that the SEC is suing Rocket Pool and Lido, accusing them of offering unregistered securities through their liquid staking products, RETH and SDETH. So that was bombshell. Lido is down quite a bit on the news. I assume Rocket Pool is too. Check that out. But any initial thoughts on that one, I guess? Them coming back?
I don't know the specifics of the lawsuit, but if there is an area where if you take money and then give back interest based on the amount you took in, I can see that could be, a problem. Now, that's not to say that staking is a problem and that staking implies any sort of governance, which is the previous SEC's allegation that ETH is a security. I don't think that's what this is. This is that essentially the internet bond part of Ethereum, where you give money to a staker and you get a return, they need to register that as that process or that whatever as a security or an investment product or something, which I think is a little bit different ground to stand on by the SEC.
Yeah, I would say so. The argument is that what the liquid staking providers do is that they take your ETH, they stake it for you, then they give you a token representing that staked ETH,
Yep.
right? So I think it's not the staking itself, it's the process of giving you a token representing the staked ETH. That's the problem. And my problem with that is that it's just dishonest regulation again. You don't have to just bring enforcement action to make this point. Because what the technology does is facilitate this process without an intermediary. In fact, all of the code, everything is public. There's no other disclosures to be had. Of course, if you can't read code, then you don't know what's going on, but you can hire someone. It's transparent by nature. There's no central organization that facilitates this. It's a set of smart contracts. And you have these different rights that are explicitly defined within the smart contracts to facilitate this process. So I don't think they're offering unregistered securities. The development team created a technology, a solution of smart contracts to do this process. And I think going after those people, and I haven't read the specifics yet because it just came out, but that's wrong and that's dishonest again. Like, this is a new technology. The regulators should be working with the industry, working with them to figure out how people can get the information they need to invest in these things and how they should actually be doing it instead of just coming down.
Yeah, and in fact, I think Lido doesn't own the nodes that are the money staked on. Though that's other people are sort of like subcontractors to Lido providing the hardware, and Lido is just the protocol level. Is that correct? Like
Exactly.
I could make a Lido node, right?
Yeah, you could run Lido software to opt your node into their system and hook up to their smart contracts to accept deposits from Lido depositors, and then to stake that, and then you get a percentage of theirs, then the smart contract passes the rest back. And that's my whole point. There's no one doing these actions. There's a team that developed smart contracts, of course, but there's no one offering it per se. It's contracts that are bringing a market together. There's a demand for this. There's a supply of it from these other people. They did the smart contracts and they come together. So it's
I think to me it just sounds like the SEC is not going to file lawsuits against everyone running a Lido node or a Rocket Pool node, so they just pick the Lido and Rocket Pool. This is the classic kind of thing, though, that I think could be beneficial if the outcome is, instead of suing, they get together and say, okay, we get this as a gray area, so how about we require certain disclosures, or we require X, Y, or Z, which is 100% possible to do because the wallet addresses, they can remain private, but you could stick an NFT notice in your wallet about all this stuff. Maybe that's the solution. I don't like the enforcement action without warning or without collaboration, though.
Yeah. The thing is, what are you trying to get disclosed? Like, what do they want disclosure about? Like, they could say whenever the developers are creating the smart contracts, you have to have this full document explaining how every piece works and explaining the risks of the system to people, and I think that's a reasonable thing to do. But like
Yeah.
on an ongoing basis, there shouldn't be reporting requirements. Like it's an open system. There's no one administering the thing. So I think that there's a better solution here.
Well, I think I don't know. I don't use those protocols, but what you described to me seems quite reasonable. Like if in plain English it said, look, your money's being sent to distributed validators. Your money could be lost. It could be slashed, meaning you lose it all if they cheat. We have no control over that. Do you understand? Yes. Okay. I'm okay with that. And presumably, sophisticated investors would that could lose a lot would know more. But again, this isn't the kind of thing that requires a lawsuit. This is the kind of thing that requires sitting down at a table and finding a solution.
Yeah, that's the biggest problem, in my opinion, too. Just another example of dishonest regulation just coming after the industry for no reason, coming after technologists, nonetheless, which is a terrible thing for America, a terrible thing for the industry in America. And you would think that, as we said, we thought the sentiment was changing from the SEC specifically because of all these different things. They're relentless. I don't know where it's coming from, whose motivation primarily, but they keep coming. And another example, which is a lawsuit that was just filed an hour ago, was that the SEC sues Consensus over MetaMask staking and broker allegations, saying that MetaMask and MetaMask swaps is an unregistered securities broker. So that just came out as well. And that's after Consensus just got them to stop their lawsuit over Ethereum 2.0 and their development in that ecosystem. So they just brought this new one.
It's just stupid. This is just nonsense. How it's basically a wallet that's completely under control of a person that can't do anything else without the person saying yes. It's software. It's ridiculous.
Yeah. No, I agree.
I don't understand it. SEC will lose. Consensus has a boatload of money. They'll have great lawyers. Administration will change. This will go away too.
Yeah, just another example. Just wanted to update you guys, let you know that the SEC is not relenting. Good old Gary is still coming at them, but some more court cases, which are never ending in this industry, to keep your eye on. So want to wrap that up. Needed to talk about those because there were some big occurrences this week, but I think I'm done talking about regulation and lawsuits.
Yeah, hey Ben, let me change the topic here a little bit to some like funnier things that happened this week that I wanted to bring up, and it was kind of my quotes of the week on crypto. And one of the quotes was by one of my favorite moderators, Paolo, on Zero Lend Protocol. And, those guys get ripped all the time about saying soon or, some other weasel word for soon. But he wrote this down on the Discord, which I thought was one of the greatest quotes I've ever heard. He said, quote, "In crypto, time is never a sure thing," which I thought was perfect, was absolutely perfect. Judging from when airdrops come out, when do I get that? When do I get that? So that was quote number one. The second quote that I saw, which was by our friend Steven Cesaro. Is that how I say his last name, Ben?
I believe so, yep.
By Steven, who said, "As part of crypto's move into the next paradigm of investing, we must see a cleansing fire of dog shit." I thought that was very eloquently put on what needs to happen before this can be legitimized even further. So those are my two quotes of the week, and they will be entered into the quote of the year competition, which we will keep track of.
Nice. Yeah,
Yes.
I like both of those. I guess the only comment I would have is that this kind of came to mind after thinking about the Solana actions plus Blinks news that we shared with you guys, but I think Steven's right that we need to get rid of all the dog shit. There's a lot of crap that we just need to get rid of in crypto that's holding the space back from like an institutional financial perspective. But I also think that there is this whole other aspect of crypto that really is just focused on gambling, focused on just making money. It's a casino culture. Chris Dixon, partner at A16Z, calls it He divides crypto into two different cultures, the computer and the casino. And the computer is really like the technologist driving forward this new financial system, in my opinion, and all these other cool use cases, perhaps. The casino is this other aspect. And I think the casino actually has a better chance of onboarding normal people to the space than the computer, the financial system does at the moment. And I think there is actually a space for that casino part of crypto to turn into interesting things for users, like games, like I don't know what it is. It doesn't have to be gambling, but it's just that entire culture of trying to get people into it. There's actually some virtue there. And Solana is playing that game while Ethereum is playing the other game. And you can hate on the Solana game of people gambling, trying to get like culture in through these celeb coins, whatever. And a lot of it is bad, I agree. But I think it's just a fundamentally different game. And that's another reason I think that you've seen the rise of the Telegram network, the open network ton recently. And I think Solana is more of a competitor with ton in that respect than they are with Ethereum, because it's more about integrating crypto with Web 2 and like traditional and getting retail on board, I would say. And Ethereum's really not in that game nearly as much. They're much more focused on the financial applications. So I just wanted to throw that out there too.
Yeah, that's a good point, and that reminded me something. On Mode Network, which is part of the super chain, they just launched literally Bet Mode, which is an online casino. It's like there's no more games here. It's just literally a casino, I believe. So those sorts of things are, instead of disguising them as, these cultural coins, it's all right, well, we're going to have gambling and there's rules and you can win and you can lose.
Yeah, I think that making explicit the fact that a lot of this is gambling, it helps. But I think most people know, like buying meme coins,
Yeah.
it's like literally gambling. You just need to know the rules.
Yeah.
And the other thing I would say here, and not all of it's gambling. I'm going to give you Chris Dixon's book because he's a really smart guy. But he talks about like the potential for blockchains. Like you look at it from a very financial perspective, and that's my initial inclination too. Like it's a new financial system. You can securitize assets, you can settle assets. That's great. But he is different. He came up in the era of the internet. He's a VC. He was a technologist in the early internet, and he talks about it as like disintermediating internet services. So disintermediating social networks. And there's all these negative externalities that come from these very large companies like Facebook, Google, Amazon, all of these controlling the internet. And we're kind of locked into their corporate network. Now, whenever the internet was more just an open protocol just between like IP addresses, and then like the web itself was just like HTTP and HTML and connecting these different web pages. There were a lot of benefits of having it structured that way, and now we're all trapped in these ecosystems from these big guys, and they're really stifling innovation because the system isn't open and developers can't have property rights over what they're building, and they might just be cut off like all these startups on Twitter were in the early 2000s. So if we can build a system where it's open and developers know they won't be deplatformed, they own what they're building, that could spur a new era of internet services. And I think that's a whole area that we can talk about and understand crypto in that we don't talk about much because we're financially inclined.
Yeah, I agree with that. Now, you mentioned Chris was a VC, and I think that leads us a little bit into, I think it leads us into the next thing we want to talk about, some of this airdrop stuff. Let me give you.
I don't know much about that.
Yeah. Well, I'm going to give you a quote online that aligns with my mental model of why I'm doing crypto. And it basically gets back to the VC aspect and also gets back to the airdrop aspect. But the quote essentially was, fee generation and actual cash flow businesses is the crypto venture-backed future. Meaning, these crypto companies these VC companies are going to get smarter and smarter and not just depend on dumping their tokens on the normal user to make their money back, because basically it's not working. Now, that gets us to Blast, which was a gigantic airdrop this week. It was Pac-Man's personal project. I will say I watched the video, and his vision is a good vision. What he wants to do is a great thing. There was a ton of hype about this airdrop. collecting gold, collecting points. I personally felt it was more of a friends and family insider deal for his favorite people, whatever. There's speculation that the base case was the blast token would go off at about 5 cents to 6 cents, a high case of 10 cents, a low case of 3 cents. Last I checked, it's about 2 cents or maybe a little under, and you could check that now if you want. But it, again, very much underwhelmed even the bear case sentiment on what it was. And there's speculation that Pac-Man's going to have something to punish all the sellers. Although it's at 2 cents this week. I don't really think that's going to happen. It's going to keep drifting lower until the way for the Blast network to financially make the token financially viable, meaning, and they do this already with their native yield and things like that, but a way to make a cash flow business out of these L2s is going to be important. So anyway, Blast along with ZK Sync, which is their chart looks very similar to Blast, along with Layer 0, which I think is not great either. And was there one more before that? Ben, I can't remember. That's been the most recent ones. The big ones coming up in the next, let's say, 6 months to a year will be Linnea, which has gazillions of dollars from consensus behind it. Scroll is getting some hype. I'm starting to hear things about Monad and Barachain, that some high quality projects going on there. I don't know what their financial models and incentives will be. But the bottom line here is maybe the era of airdrops is over, or certainly the era of small players and e-beggars making a ton of money on airdrops is over. You have to go in with conviction, I think, to get anything substantial out of that. And you still can. Now, people are griping because they're only going to make 10 or 15% on these things, not 100 or 150%. So 10 or 15% is still pretty good, but that's an order of magnitude change in people's mental models about what they're going to receive. Having said that, there are still all kinds of opportunities in the space to make money with financial trades. And Ben, I guess we've talked about this, but talking to a couple of people now that are way more knowledgeable than you and I about setting up and executing these trades, and want to start having that on to show, what some maybe more knowledgeable and experienced DeFi, I guess, I don't know the right word, but in this space, maybe degens are doing now to make money aside from just farming airdrops, because those do seem to be out the door.
Yeah, I would say I think projects that have already committed to an airdrop need to follow through on that commitment. And there are some, I believe, that have already implied that they would. I'm not sure if Scroll did. I'm pretty sure Barachain has, and some others. But the era of airdrops as an initial token distribution mechanism appear to be over. A lot of people are talking that projects have no desire to do this anymore, and they need to find better ways because it just makes everyone mad. The community leaves, the TVL flees as soon as they get the airdrop, everyone dumps the token. And it does not lead to good incentives for building a community and sustainably bootstrapping the ecosystem. So I think new models are going to be attempted moving forward.
Yeah.
And that's the rumors I'm hearing. And I think it's true. I think that it was a thing that worked for a few years. People have learned to game it, and people are kind of entitled to it now. So something new is needed, and it's probably for the better.
Yeah, and the thing that I'm doing, the reason I'm doing this is because I understand it. The whole idea of staking these free tokens to me makes so much sense, and I'm seeing this already. I'm getting ETH for staked tokens. That sort of means that the business is cash flow positive. They're giving me ETH. Also, even if it's not cash flow positive yet, that fits into the traditional VC-backed model where they will throw money to support a project, even if it's not cash flow positive for a long time, if it can continue to scale to a large amount. So maybe that sounds like a traditional security. I don't know, and I don't really care. But the whole idea of investing in assets which provide income streams is so easy to do in crypto, and something that I'm still hyper bullish on. and still continue to defer gains into the future, because I believe what I could get from those sorts of staking of whatever form can be so much greater than what I could get in any other market.
Yeah, I think I sort of agree with you, but I would caveat it at the same time saying that it's very possible that these things are not cash flow positive in the future ever. Like only the largest lending markets with the most activity, like liquidity begets liquidity. If these things are adopted on a large scale by institutions and used globally, it's going to be a few markets with massive liquidity because it's kind of that economies of scale effect that more liquidity gets you. And it's very possible that these governance tokens that kind of take a percentage of the fees dwindle and decrease over time and aren't worth anything in 5-10 years. I think that's extremely possible. So on a medium time frame, I agree with you. But over the long term, I think it's very possible that like these smaller projects on some random L2 being like a viable business model, I don't think that's going to be the case for the vast majority of projects, just to be completely honest.
Yeah, well, Ben, what you've just described is the typical VC-backed model. They back 10 and one works. And the unique thing, though, about staking that I believe is it's, you put your money in these protocols, you get rewards, you get tokens, you stake them. Those tokens are basically free. You can take your capital out, you can still get rewards. If that works for 5 or 10 years, probably you've made a decent return on that initial capital, which is, as long as it doesn't get rugged or something is gone on to do something else. I don't think, what I'm describing, I've fully thought out yet. I've just seen the beginnings of sort of the reward side of it. If the rewards go to 0 in a year, well, then it wasn't worth it. It was a bad thing. If they don't, well, then we need to talk more. But the whole idea of pumping money to users or pumping money in to support a project until it either flourishes or dies starts to fall into a very well-known way of doing business for the venture capitalists of the world. And I like that for crypto.
Yeah, I would say that eventually, at the end of the day, these tokens to have value need to be attached to some kind of actual cash flow and and cash flows and have the right to some kind of piece of like a business you're calling it, but the protocol's revenue. They need some right on that because to be honest, we're just playing in fantasy land with most of this stuff right now. They are quite literally almost worthless governance tokens and we just pump them. And the only reason they have value is because crypto markets are crazy and people trade them and the valuations are insane. Like the valuations on these things are like billions of dollars for these projects. And there's public companies trading at much slower valuations that actually have a right to cash flows from that company. So it's kind of just fantasy land right now. And I think you're right over the long term that is the model that needs to work for these tokens to have sustainable value. But again, I think most of them just don't over time. Like I think a lot of these L2s die, like a lot of them don't amount to anything. But I would say that over the near term, if you're thinking like most VCs go on like traditional VCs go on like 10-year timeframes. Most funds are structured 10 years. And that works for like traditional tech companies. In crypto, I would say the cycles are way shorter. It's like 2-3 years max for the VCs. And that's what they're betting on. So I don't think you should get confused about like locking up your tokens for 10 years because in my opinion, they're going to be worthless after that period of time. But if you're playing the game, just shrink it down over to a shorter time horizon. And it's a very viable way to make money.
Yeah. So Ben, my specific case, I said, all right, I went into this wanting to stake to get revenue out of staking. I'm going to stake it for 4 years. And going in, I know in 4 years, it's most likely these are 0. It's whether I can recoup a return on my initial capital that created these tokens that's better or worse than in traditional financial markets. And the funny part is, people bitch and moan about doing that, but it's exactly like Pendle and all these other financial like yield generator things where they strip off yield tokens for points. It goes to 0 and all you're left with is these points, which you hope are something. So it's definitely a new model, but it's a model I think that is sustainable in 1 out of 10 cases, like you said. 9 of them are going to fail. We know that going in. But it gives me access to VC level investment in these new protocols And maybe if I pick right, I get the one that scales from 10 million to 10 billion.
Fair enough. I won't disagree there. I think it is like a good like medium term like return solution. Like if you're looking for more of like a cash flowing strategy than staking tokens on like
Yeah.
dexes or lending markets for a portion of the cash flows, or like the bribe mechanisms that Velodrome uses, and you stake your tokens and kind of allocate the emissions to different pools, then you get a percentage of the rewards from that pool, is a good strategy here. I'm just still very skeptical about like the use cases of all of this. Like a lot of it is just like you just look at the activity, right? For like a lot of these lending markets and exchanges, it's just people within the crypto ecosystem. All of the yield, all the demand is just coming from people speculating on the price of these tokens. It's very like cyclical, and the only real demand over a longer period of time needs to come from like big players using
In
these
the protocol.
markets
Yeah.
to conduct large scale financial transactions. And yeah, again, like most of them, just this will not be the case. Like people will just stop gambling on these tokens once reality sets in over the next 5-10 years and the technology solidifies, and they'll just die. So I would just rather bet over, if I couldn't sell anything for 10 years, I'm not doing this. I'm buying Aave, I'm buying Maker, I'm buying the champs,
Uniswap?
the dominators in each market. Uniswap, yeah,
Yeah.
I'd buy all of those. And I probably
Yeah,
should
no,
be buying them now, honestly. We can talk about that. I am very bullish on DeFi. And those projects do the same thing. They're gonna have a right on those cash flows. They've just waited so they don't get sued by the SEC in the United States at least, but
Yeah.
they're gonna be profitable.
Okay. What's next on your list? We're getting near the bottom here.
All right, just a few more news items then. We don't have to go into them too much.
Okay.
We've been going for a while, but Vitalik backs a new blockchain, MegaETH. It's an L2. Actually, it's set. I believe it's an L2. It is, but it raises 20 million at a 9-figure token valuation. And let's see, I believe it. I'm not sure what
That's
kind of L2 it is.
100 million. Okay.
Yeah. Okay, it dubs itself as the first real-time blockchain with full Ethereum compatibility. Real-time here means MegaETH is capable of processing transactions as soon as they arrive and publishing the resulting updates in real time. MegaETH uses Ethereum security, Optimism's fault-proof system, so that sounds like it would initially be an optimistic rollup, and its own optimized sequencer to achieve real-time performance. Okay, interesting. I'll have to dive more into this, but this is Vitalik backed it, so it's something to keep your eye on. I guess we're still funding new chains. We have Monad coming up in L1, and now kind of a high-profile L2 here as well.
Is that going to be part of the super chain? Using Optimism's?
I guess so. I think so. I mean, I think you have to use. I don't know the technical details there, to be honest. I can look into that to see what constitutes being a super chain, but it sounds like that will be the case. So
Yeah. Cool.
yeah. Tether to stop minting stablecoin USDT on Algorand and EOS. Not really that interesting. Just wanted to bring that up. Those are kind of ghost chains. No one uses them. But Tether pulling out there. So that's some news. Let's see. I don't think you'll have any thoughts there.
No.
President of Jump Crypto steps down. This is after last week we announced that they were being probed by the CFTC, I believe. So he announced his resignation and amid reports of a pending investigation into Jump Crypto's activities in several incidents. So Jump has been kind of a troubled actor within the crypto space for a few years, getting into a lot of issues. So maybe their role is winding down, which is probably not good.
And it's a tale as old as time. When the news comes out that any firm is being investigated in trouble and the CEO steps down, one word comes to mind, and that word is guilty.
Yeah.
So
He'll probably be in the Bahamas or something. No extradition.
Yeah.
Switzerland, maybe. Somewhere with no financial crime extradition within the next few months, maybe.
probably.
Yeah. Okay, the last thing here that I want to talk about today is this is kind of along the lines we talked about earlier, more sustainable business models, but introducing Rainbow ETH rewards. We are airdropping our hard-earned ETH to the most active Rainbow users every week, and Rainbow is a wallet software, mobile wallet, I believe. They might have a browser extension as well. But this is just phase one. There are more phases to come, but let's talk about ETH rewards. The plan is simple: do stuff on chain, get points, earn ETH. Today we're airdropping ETH to the top 10,000 all-time point leaders. Going forward, ETH rewards will be airdropped every Tuesday at 420. So, at 420. But but it sounds like what they're doing is taking maybe the fees that they take. I'm actually not sure where Rainbow, maybe through like a swaps product like MetaMask. I don't use Rainbow, so I'm not sure. But some of the fees from there, they're converting to ETH and passing back to users, which is pretty cool.
Yeah, yeah. I mean, if they're giving it out as a like liquid asset like ETH, I think that's awesome.
Yeah, it sounds like it'll be immediately liquid. You get rewards, kickbacks for using the wallet software. I'm gonna have to try this out. Maybe get some free ETH for using the wallet. I think that's pretty cool, and I think we'll keep seeing more stuff like this. But yeah,
All right. All right, Ben. Well, hey,
well,
shout out to the
that's
Inkwell Bloomington, my favorite. They have the best coffee in the world. All right, still trying to get them to be a sponsor. Uh, yeah, this was a good show. Went a little long, but it was a good show this week.
yeah, is a good one. I think I'm pretty optimistic about the market still. Don't let the bears get you down. I'm bullish. We had a tweet. I'll link in the description about why you should be bullish. Not financial advice, not a financial advisor. But I feel pretty good about the markets. The underlying growth drivers we have are strong. Um, yeah, I'm just optimistic. A lot going on. Some good, some bad, but we're here nonetheless.